Thank you so much for that. Can you hear me? Can everyone hear me? You can hear me, just drop a comment in the chat that you can hear me. Okay. So we are going to be starting soon. I would just want to give a grace of 5 minutes to every other person that would want to join the call before we start the call proper. But before then, I would want to hear our expectation. What are we expecting from the call in terms of have you gone through the Nigerian Tax Act? What are your expectations? What are your questions? Please do well to drop your notepad, bring up your notepad, start noting down your question, or you can even put it down in the chat box so that when it is time for question and answer, we can always make reference to that. So please, let's get your questions and what you are expecting from this particular call. And if you know anyone that's supposed to be on this call and they are not on the call, please do well to ask them, inform them to join the call now. So I'm just going to put up my screen so that we can all see what it's going to just guide us. But today we'll be interactive, we'll be taking questions. Please let me know if you can see my screen. Okay. So please do not hesitate to drop in your questions, all the questions that you have concerning the new tax act. Please do well to leave the question in the chat box. So today, like I said, we are going to be talking about structuring your business, structuring your business, ensuring that you are ready for the 2026 tax. Remember that the new tax will be implemented in 2026 from January 1st, 2026. The whole purpose of this section is to allow you to know what you should put in place, what you should have in place to ensure that your business is ready for the 2026 tax. So we are going to be talking about how to structure your business, how to ensure that you are compliant, and most importantly, how to also grow your business. So this section is meant for small business owners, startup, employees, employers, freelancers. As long as you are in Nigeria or you have a business that you are doing in Nigeria, this call is meant for you. So we are just going to dive right in. So to dive right in, I would want to give us an overview of the Nigerian Tax Act 2025. The Nigerian Tax Act 2025 brought together major tax law in Nigeria into a simplified law. So in Nigeria, over time, there have been different type of law. We have, apart from the company income tax law, we also have the PIT, we have the Finance Act. From 2020, there have been different type of Finance Act. So the whole purpose of the Nigerian Tax Act 2025 is to merge everything together to ensure that in a glance, you as a business owner, you know what to expect, you know what to do as it relates to your business, as it relates to your taxes. So the main goal of this act, unlike what a lot of people online are saying, is to ensure that to reduce the number of taxes. You don't have to pay company income tax, value added tax, police levy, all sorts of taxes. So the goal of this particular tax is to reduce the number of taxes that individuals and businesses are paying and also to ensure that the payment is easier, because we all know that it is difficult to pay taxes in Nigeria. So the goal of this act is to ensure that when you are paying your taxes, it is very, very easy to pay your taxes. Secondly, another reason for this act is to remove any form of nuances, any form of burden on poor citizens and small businesses. Unlike the notion that a lot of people have that, oh, the goal of this particular tax is to put more burden on small businesses, is to put more burden on individuals. That's not the case. The goal of this task is to actually remove that burden, and I'm going to be showing you during the course of this particular section. Also, ensure a digital system to make tax filing faster and more transparent. If you've been filing your taxes, you will know that over time, if you want to file your PIT, you just pay with remitter. And guess what? If you misplace your remitter receipt, you misplace your RRL number, it might be difficult for you to be able to see those previous taxes that you've paid if you don't have those receipts and if you don't have those RRL number. So the goal of the Tax Act is to ensure that we are using a digital system that makes tax filing faster and more transparent. So that in a glance, you know how much you're supposed to pay, how much you have paid, and how much is outstanding for you. It's also to ensure that there is fairness between the federal, state, and local government. Of course, you know that the federal government collects certain type of tax, the state government collects a certain type of tax, while local government also collects it. So the goal of this tax is to ensure that it is fair for the local government, for the state, and even for the federal government. And generally, the whole goal of the Nigerian taxers is to make sure that tax compliance is simpler, faster, and fair for everyone, not just for the rich and not just for the rich alone, but for everyone. So what are the key reforms in a glance? The first thing is digital assets taxation. Before now, stuff assets like cryptocurrency, NFTs, tokenized securities were not taxable. People were just trading the way they want, making income the way they want. And remember, tax is being paid on your profits, right? So before now, when you make profit from the sales of cryptocurrency, your NFTs, those are leakages for the federal government. They were not able to tax such form of income. But with the help of the new Tax Act, such income will be taxed. So if you have your cryptocurrency, if you have your NFT, such income will be taxed. Also, to control, sorry, if your mic is muted, unmuted, please do well to mute it. Thank you. Do well to mute your mic if you are not speaking. Secondly, to control foreign corporation rule. So Nigerian parent company now pay taxes on profits retained by their foreign subsidiary to prevent tax avoidance. So in taxes, we have what is known as tax avoidance, and we have what is also known as tax evasion. So the goal of this tax act is to ensure that to a level they curtail any form of tax avoidance that you as an individual might be planning for your business in terms of your foreign earnings and all of that. The goal of it is to ensure that the taxes that is meant for Nigeria is being paid to the federal government. Now, we also have the rent relief for individuals. I'm just going to focus on the key ones for members of the call. We also have the rent relief for individuals. So now you can claim up to 20% of your annual rent, but up to a maximum of 500,000 naira. So if your rent is a million naira, you can claim up to 20% of your annual rent. But the maximum you can claim is 500,000 naira. So which means that if you are paying an average of, let's say, 10 million annually as your rent, if you are paying an average of 10 million annually as your rent, 20% of 10 million is 2 million. You won't be able to claim the entire 2 million. The maximum you'll be able to claim is 500,000 naira. And by doing this, you would be able to reduce your tax payable. You'll be able to reduce your tax payable. And bear in mind, homeowners, if you have a home, please, because you're not paying rent in your house, you won't be able to enjoy such benefits. We also have the free trade zone updates. We have the development updates. We have the economic development initiative. All of these are meant for big businesses. These are the initiatives that the new tax act has brought for us as business owners. So unlike before that you have to pay NITDA levy, national levy, education tax, you don't have to pay all of those taxes. Everything has now been merged into what is known as a development levy, and you just have to pay 4%. Unlike when you pay education tax, you pay police levy, you pay all this levy. Instead of doing all of that, you just have to pay 4%, and that covers every other form of taxes. So we also have the value added tax automation. This is for business owners. Remember, as a business owner, if your turnover is less than 25 million, your annual turnover is less than 25 million, you're exempted from paying VAT. You're exempted from paying VAT. But the fact that you're exempted from paying VAT does not mean that you will not file VAT. I would like to clarify that with business owner. The fact that you're exempted from paying, if you feel that, oh, my turnover is less than 25 million, and because of my turnover is less than 25 million, I'm not supposed to pay VAT. Congratulations, yes, that is good, but that does not mean that you will not file VAT. You are still expected to file your returns on a monthly basis. So businesses can now use electronic invoicing and reporting to approved by the tax authority. All of this is just to ensure that your records are accurate, you keep proper record, and the FIRS is able to track your information. The goal of all of this is to ensure transparency. So now, let's talk about the current framework, the Nigerian tax framework, what we currently have and what will be applicable from next year, that is January 1st, 2026. Currently, we have multiple taxes administered separately by FIRS, the state IRS, the local government. For FIRS, we are talking about the Federal Inland Revenue Service. The state IRS, for each state have their internal revenue services, like Lagos, that is the Lagos IRS. In Abuja, we have what is known as the FCT IRS. If you are in Borno, you have your Borno internal revenue service. So each state is expected to have their internal revenue service, and then we also have taxes that are being collected by the local government. So unlike before that, everybody is collecting taxes. Now we have a unified digital tax reporting for both individuals and businesses. Currently, we have what is known as high non-compliance due to complex filing process and low enforcement capacity. As a tax consultant, we've seen that a lot of individuals don't comply in terms of paying their taxes. Most individuals don't like paying their taxes. They don't like paying their taxes. And when you ask them why, they'll say, oh, I want to pay, but it's not easy for me to pay. I don't even know how to go about it because of the whole complex filing process. But now, from January 2026, all of this will now be clear. So which means that it will be clear. And as a small business, you would see that the system has now been made easy for both small business and big businesses to properly file their taxes. The whole process has now been simplified, and small business owners, the threshold are clear. While you're for VAT 25 million, you don't have to pay tax, you don't have to pay your VAT, but of course you still have to file your VAT. For businesses whose turnover are less than 100 million naira, you would be exempted from paying taxes. That is the company income tax. You'll be exempted from paying such taxes, but that does not mean you won't file your report. you're expected to file your report, because all of the thresholds are now clear for you as a business owner. Then, of course, we are aware that we have a lot of freelancers, lots of people are working as freelancers on Upwork and other digital platforms. So many digital earners, many SMEs operating outside the formal tax net. The formal tax net, for the purpose of context, are employees. As an employee of a company that is compliant, you have to pay your payee on a monthly basis. Your payee is being deducted from your salary. It's being deducted from your salary. Then we also have companies that are compliant. Annually, they pay what is known as their company income tax, and they also act as an agent of the government to pay their VAT, on behalf of FIRS. They act as an agent of the government. So all of this, those were the major people that were in the tax net of the government. But now, with the help of the new tax act, they are opening it. They are integrating your bank to help them assess taxes, because they know that when you earn income, these funds are being transferred into your bank, and they have like an AI tool that is able to signal, that is able to track your the income that comes into your bank account. So when you track the income that comes into your bank, it will also check to be certain that, oh, this person has been receiving a certain amount of income. Is this person paying taxes on the income that he or she is receiving? So because of there's a greater integration, FIRS will be able to track. So if you're not paying your taxes, they'll be able to know that, oh, you've been making money, but you've not been paying taxes, and they can easily now pursue those people that are not paying their taxes. Then, before now, we have frequent policy change without clear implementation timeline, and which was causing a lot of confusion. Before now, some people will say, oh, no, this is FIRS directive. Other people will say, oh, this is CIT, this is Finance Act directive. Because of that, all of this is causing a lot of confusion. Most people will be like, oh, they don't even know. You go to the tax office today, they tell you, oh, this is the way you're supposed to do. Tomorrow you come, you hear something different. But with the help of the new tax act, all of this has been resolved, and now everything is becoming automated. Instead of the regular manual filing you can now do all of this online. Then let's talk about the key tax authority and their new roles. Of course, you know about the Federal Inland Revenue, also known as the FIRS. The Federal Inland Revenue handles CIT, that is company income tax. They handle value added tax, they handle digital tax, corporate earnings. Now, FIRS will be working they'll be working with banks. There'll be a lot of data integration. They are going to be using your data from the bank. So of course they have all of this information already. So but with the help of integration, they can easily get this information. And so gone are those days whereby you declare your income, you say, oh, I've not made money, or I've not made. They have access to your bank account. They can easily see what you've made, right? They can easily see what you made and also check with what you declare. So they can easily monitor whether you are declaring your income. Then we also have the State Inland Revenue. Remember what I said about the State Internal Revenue Service? Their work is to manage your personal income. So they will be tracking freelancers, influencers, online vendors. They will use your NIN. They are going to use your BVN to track all of this information. We also have the local government that collect levy from the market, shops, and all of that. There will be digital ticketing, coordinating tax collection, in order to crop, I paid tax, I paid my levy today. Another person will come and say, madam, you've not paid your levy. With the help of digital ticketing, they'll be able to track all of this. So just to mention, the government is doing all of this to make life easy for you. Then lastly, we also have the Joint Tax Board. The work of the Joint Tax Board is to harmonize taxpayer record. It's to ensure that all the information of taxpayers in Nigeria are properly harmonized. So there will be a unified tax identification number that will be linked to your TIN. That will be linked to your TIN. That will be linked to your NIN. That will be linked to your BVN and any other form of digital wallet that you have. So in the coming future, we will see a lot of integration. Gone are those days whereby, the information you have is separate information on your BVN, you have another separate information on your NIN. in the coming future, all of this will be harmonized. Then let's look at the National Tax Act. We have different type of taxes, and I'm going to break it down. So we have the company income tax. This is for business owners, people that have registered their business, they've registered a limited liability company. So as a registered business, you are expected to, if your turnover is less than 1 100 million naira, you are exempted from paying taxes. If your turnover, I'm going to say it again, if your your annual turnover is less than 100 million naira, you're exempted from paying taxes. But guess what? The fact that you're exempted from paying taxes does not mean you should not file your account. I always say this: ensure that you file your account, ensure that you keep your proper books of record. During the course of the call, I'm going to tell you the relevant books that you are expected to keep as a business owner, as a freelancer, as an influencer, and even as a small business owner, as a company. And I'm going to explain all of the books that you're expected to keep. Then for companies that their turnover is between 100 million and 500 million, you're expected to pay 20%. But if your turnover is above 500 million, then you're expected to pay 30% of your profits as company income tax. Then we have the personal income tax. The personal income tax, this is talking about employees of corporations. So if you know you're an employee of any organization, you're expected to pay your personal income tax. That is payee. As a freelancer, you're expected to pay your personal income tax. An influencer, remote worker, as long as you're making income, personal income, you're expected to pay your personal income tax. And guess what? If your annual turnover, that is your annual income, if your annual income is less than 800,000 naira, you are exempted from taxes. So if your annual income is less than 800,000 naira, you're exempted from taxes. But the fact that you're exempted, I'm still going to emphasize this. The fact that you're exempted does not mean that you're not supposed to declare. You're still expected to go to the office and say, oh, this is my income, oh, and this is what I'm going to, this is how much I earn. But you're not just paying taxes. Then we also have other forms of tax. We have taxes like the value-added tax. The value-added tax is the tax that is being paid by the final, it is being bought by the final consumer. So as the final consumer of a product, you are expected to pay what is known as value-added tax. Bear in mind, if you're an organization, you're expected, if you're an organization, if you're an influencer, any services that is vatable. So we have vatable service, vatable products. If you are rendering vatable services and vatable products, you are expected to charge VAT. And the downside to this is that if you as a company or as an individual, you're not charging value-added tax for a services or for a product that you're expected to charge. If the tax authority find out and they realize that, oh, you've not been charging, you can't go back to your customer and go and say, oh, you know, I sold the product to you, I render a service, you're supposed to pay value-added tax on that service, give me the money. No, the FIRS would collect that money from you. So you have to pay from your own pocket, money that you should have charged your final consumer. Remember, value-added tax is a tax that is being paid by the final consumer. But remember, if your turnover, like I said, is less than 25 million, you don't necessarily have to charge value-added tax. But that does not mean that you don't have to charge value-added tax, but you are still expected to file. You are still expected to file your report. And what are the services? There are some services that are exempted from VAT. We have services like basic food, like if you are buying raw food stuff, like rice, beans, all of those services in their raw state, they are exempted from VAT. If you're education services, they're exempted from VAT. Basic health services, they're exempted from VAT. So all of these services are exempted from VAT. But remember, all the other services and products that are not exempted from VAT, you are expected, you as a business owner, you are expected to charge VAT, act as a collection agent for the government, for FIRS, collect it from the final consumer and remit to FIRS. So we also have what is known as the capital gain tax. Capital gain tax. So capital gain tax is a tax that is being charged on your capital gain. During the course of the week, the FIRS released the publication saying that investors, that is those people that invest in short-term instruments like treasury bills, commercial paper, promissory notes, bill of exchange, short-term investors, you know those gains that you are making, right? That has been exempted for tax, you will start paying taxes on it. So which means that if I buy a treasury bill for like a 3-month treasury bills, and a 3-month treasury bills that is paying, let's say, 18% per annum, and at the end of the 3 months I made like 45,000 naira on my investment, maybe on my investment. Instead of getting the entire 45,000 naira as my income, as my interest on my investment, I'm expected to pay 10% of it as capital gain tax. The same thing for your crypto assets. You know, when they'll say, oh, my Bitcoin have come, let me sell part of it. When you sell, you're expected to pay sorry. When you sell, you're expected to also pay what is known as capital gain tax on all your profits. Then we also, another form of tax that we have is the WHT, also known as the withholding tax. So withholding tax, a lot of people mistake withholding. They're like, oh, I'm paying company income tax, I'm paying payee. Why do I have to pay withholding tax? So what are withholding tax? Withholding tax is an advance tax. So the government are like, okay, we are trying to get more people into the tax net. If I, as an individual or as a professional, I render a service to you as a company, you are expected to withhold. You're expected to withhold a portion of my earnings and remit it on my behalf to the government. You're expected to withhold a portion. There are different rates for different type of services. You're expected to withhold a certain portion of that income and remit to the government. So let's assume that you're withholding 10%. If I render the service of, let's say, 100 million, a million naira, you're expected to withhold 10%, that is 100,000 naira, and remit that 100,000 naira to the government. But bear in mind, that money is not lost. At the end of the year, when I'm filing my taxes, I've calculated my taxes. If I'm supposed to pay 500,000 naira, because of your company has deducted 100,000 naira from my taxes, from my income, and remit on my behalf, you are expected to give me what is known as a credit note. So that credit note, I'm going to take it to the FIRS. I'm going to say, oh, or the state inland revenue. I'm going to say, oh, they withheld a certain amount already. So let's assume you guys have your company has withheld 100,000 naira, and I'm supposed to pay 500,000. At that point, what I'm going to be paying in form of taxes out of pocket will be 400,000 naira, not 500,000, because I have a credit note that you have withheld. So withholding tax is an advanced form of taxes. Now, that can be removed from either your personal income tax or your company income tax. So as a business owner, you are expected to withhold taxes. There is a list of services that you are expected to withholding tax for. So whenever you get maybe contractors or a consultant rendering such services to you, before you pay them, you're expected to withhold it. And the downside to not withholding is if FIRS to come, or the state internal revenue should come. If the state internal revenue should come to and carry out audits, and you realize that you've not been paying all of this, you have to pay out of pocket. You will not have the opportunity to go to your consultant or to go to that professional that, oh, please come and pay, I forgot to deduct. So this is why you need to have all of this information built into your system. Now, for personal income tax, a lot of people have been confused that, oh, how much am I supposed to pay in terms of payee and all of that? So this tax table would explain all of this, and I'm going to take my time here to explain the personal income tax table. So like I said, if your total earnings, if your total salary for an entire year is under 800,000 naira, you are exempted from taxes. That means you are not supposed to pay any form of taxes. 800,000 naira is exempted. And how does it work? If I am making an average of, let's say, 70,000 naira if I'm making like 70,000 naira on a monthly basis. I'm not expected to pay taxes. I'm not expected to pay taxes. So you might want to just do the calculation for 800, any your total turnover, as long as your total income is less than 800,000 naira, you're exempted from paying taxes. But now come closer for those people whose annual income is more than 800,000. How will it go? Remember, the personal income tax is a progressive tax. The goal of the personal income tax is to ensure that the people that are making lesser money pay lesser tax, while the people that are making a lot of money pay a lot of taxes. Remember again, the goal of this is to ensure that the people that are making lesser money are paying less tax, while the people that are making lots of money pay more in terms of tax. So if your income is within the range of 800 to, if your income is, so let's assume that on an average you're making an average of 4 million in terms of your annual income. The first 800 that you make, that is 800 out of whatever you're making, will not be charged to tax. The only thing that will be charged to tax is just 3.2. And the will just be 3.2. And the 3.2 that will be charged to tax, that is the 3.2 that will be charged to tax, is not all the 3.2 that will be charged to tax at 15%. Just 3 million out of it will be charged to tax at 15%. Then the remaining 200,000 naira will be charged at 18%. Let me say it again. If, for example, if your total income at the end of the year is 4 million naira, your first 800,000 naira, you will not be paying any form of taxes on that. But remember, when you deduct 800,000 naira from 4 million naira, you are left with 3 million naira. So which means that that amount of money will be charged to tax on the first level, will be charged to tax on 15%. Then the remainder, which is 200,000 naira, will then be charged on 18%. So, but the goal of this tax is to ensure that those people that are making more money pay more taxes than those people that are making lesser money. The goal is to tax the rich and lessen the burden of the poor. There's a tax calculator that you can use to compute your payee. Now, let's talk about what is known as realization event. The goal of realization event is just to help you to identify when I'm supposed to pay taxes when it comes to my company income, when it comes to my capital gain tax. So a lot of people have been complaining, oh, when am I supposed to pay my capital gain? When am I supposed to do all of this? I'm going to take my time to explain this so that you know when you are supposed to, at the point at which you are supposed to pay your capital gain tax. Your capital gain tax is not on the absolute amount. It is on the gain that you've made. And for individuals, same for individuals and for company. If you sell your cryptocurrency or your digital asset, in terms of, let's say you're selling your stocks, right? You swap your stock, you swap your assets, you swap your assets, all of this. The moment you hit the threshold in terms of the volume, if you make an average of 50 million and above in terms of your capital gain, you're expected to pay that 10% of that amount as capital gain. So when is a realization event? We have when you sell your cryptocurrency, when you swap from one asset to another, when you use your cryptocurrency to pay for goods and services, when you transfer your assets as a gift or to a related party, except for your spouse. So if you are transferring to your spouse, the government will understand and they will not charge you. But if you are transferring to other person, you are expected to pay what is known as capital gain. Also, in terms of fundraising, this is for those people that are raising fund. When you are transferring your equity and every other forms of token, and there is capital gain in between, you are expected to pay your capital gain to FIRS. So now I would like to say this, that the fact that you are holding, as long as you are not selling, as long as you are not disposing your, sorry, just give me a second. Okay. So as long as you are not, as long as you are just holding your assets, that does not necessarily mean that you have to pay CGT. So a lot of people are confusing, oh, I'm just holding my asset, do I have to pay CGT? No, you're not supposed to pay. The only time you pay CGT is when you are transferring. And when you've made the gain, that is when you are supposed to pay CGT tax. That is capital gain tax. So as a business owner, I would like to say this, that as a business owner, in this new tax regime, the only thing you can do for yourself to ensure that you are on the right side, you are on the right side of the law, is to ensure that you keep all the relevant books. As a business owner, to ensure that you're on the right side of the law, because gone are those days whereby you are doing manual filing, or you're not filing, you're not compliant, and the government is not even tapping you on the wrist. Going forward, the federal government will be going hard for business owners, for all form of income earners that are making income and are not declaring. Because guess what? They have access to your bank account. And because they have access to your bank account, guess what? They can easily get this information. Gone are those days whereby you can under-declare. You remember you can under-declare because they are seeing everything that is coming into your bank account. So ensure that you keep all of the relevant books. I'm still going to talk about how to keep the relevant books for business owners, for individuals, and for companies. So this is a guideline on how to file your capital gain tax for individuals, for companies. So for individuals, you must file your capital gain tax within 30 days of the disposal of the tax of the asset. So if you've disposed your asset, if you've sold your asset, and you've made a gain, you are expected to deduct your capital gain and remit to the relevant authority. Also, for companies, when they sell their digital assets, they are expected to file this separately on Tax Promax and remit to FIRS. Then we also have what is known as exchange and platforms. The government will definitely appoint a collection agent through which, when transaction pass through that platform, what is known as when transaction pass through the platform. So right now, just like I said, for withholding tax, that 10% is expected to be deducted from your short-term instrument, instrument, investing instrument like treasury bills, commercial paper, and the likes. When transaction pass through such platforms, like for your broker, if you've been investing, you know that you can invest through your broker, maybe through their app, through their platform. The government are now saying that even for your CGT, when there is a gain, they have authorized this platform to serve as a collection agent, so that when there is a gain, they would collect it and remit on behalf, and you will just get a notice that, oh, you've paid your capital gain tax. So let's talk about this. A lot of people have been asking, that means how will they know my income? Like I said, the government will know your income because the bank, they have access to your bank account. They have access to all your member, they have access to your BVN and all of that, and your BVN is linked to your bank. So the bank, since they have access to your bank, because they have access to your bank, there is an AI software that is being integrated now that monitors the inflow into your bank account. You know, the same way when money comes into your bank account, a certain amount of money comes to your bank account, and then your bank flag it and like, oh, you need to come and provide more information for them to be able to be certain that, oh, this money that is coming into your bank account is a legal money. Same thing for tax now. when money comes into your bank account, there is an integration that flags it, that shows, oh, this is the pattern. A certain amount of money comes into your bank account. And that integration would also check, have you been paying your taxes? When you check if you've been paying your taxes, on the amount that is coming in, of course, it's not going to flag it. But if it notices that, oh, money is coming into your bank account and you are not paying your taxes, it's definitely going to flag it. And when it flags it, it's going to automatically notify the relevant tax authority. It's going to notify the relevant tax, and when it notifies the relevant tax authority, they can now they either serve you a letter, unlike gone are those days that they have to serve you a physical letter. Now they can serve you a digital letter. You might just get a notification that so you're expected to come into their office for verification and all of that. Another way that they will know your income is, if as a salary earner now, we all know that if you work in your company, they usually pay salary at a particular date or within a particular period of time. The bank will be able to notice all of this pattern. The HERA will be able to notice all of this pattern. And when you notice that, oh, you always get a certain amount of income on a regular within this particular period of time, and for tax purposes you've not been paying, it can easily flag it. Or if the amount that you are paying does not match the amount that you are declaring, this software can also flag it. So these are the ways that the federal government, the relevant tax authority, can easily track and know that, oh, you're making money but you're not paying your taxes, and they can now invite you for a tax audit. Also, unregistered business owners, please, if you've not registered your business, this is the right time for you to actually register your business, so that when you register your business, of course, you can take advantage of the exemption. In terms of, if your turnover is not up to a certain amount, you don't have to pay taxes. You can take advantage of all of those exemptions, because if you're just running it as a spirit leave, remember, when they call, you won't have all the relevant documents to back your claim. So when would I be required to file or pay my taxes? I've taken out time to identify the period of time, the filing deadline, so that you know when you should pay your taxes. For company income tax, 6 months after your financial year end. So what is 6 months after your financial year end? So let's assume that your financial year end, every company has their financial year end. For some people it's December, for some people it's March, for some people it's August. So if your financial year end is 31st December, you're expected to file your annual return latest by June of the next year. You're expected to file your audited financial statement and pay your company income tax on or before the end of June for that next year. For a new company, within 18 months after incorporation, that is, if you are incorporated, your business is registered, and at the same time you commence business, you're expected to also file your returns within 18 months, whichever one comes first. And note that if you don't pay your taxes, if you don't file your accounts, you would have to pay what is known as interest and penalty. There's interest and penalty for late payments. That is, if you don't file, whenever you decide to file, you're going to have to pay the penalty. You have to pay the penalty, and you also have to pay the interest. So apart from the penalty that is being stated, 25K for the first month and 5K after every month, you are still going to pay what is known as interest. And the interest is being calculated based on the normal MPR rate. It's based on the MPR rate. That means the FIRS are practically telling you that, oh, since you decided not to give us your money, since you decided not to pay your taxes as when you are due, they are assuming that, oh, they've loaned you that money, so you're expected to pay interest on that taxes that you've chosen not to pay, and that interest would be paid on the actual tax you're supposed to pay and the penalty. So you can imagine how much you'll be paying. And just for example, let me give you an example. During the course of this week, I had a scenario whereby someone was supposed to pay tax. The person had not been paying their taxes, and when they did the computation, the person had to pay about 2 million in interest, not even in penalty, 2 million naira in interest alone. So this is one of the reasons why we always advise that try as much as possible. You should be compliant as a business owner try as much as possible with your compliance so that you don't end up paying penalty. You don't end up paying penalty and you don't end up paying interest. Money that should have been used for the business development, you then end up paying it as penalty and interest. So as payee, pay as you earn. You expected this, your company is expected to deduct your payee before your salary is being paid. And after deducting your payee, they are expected to actually pay it. So we have some companies that they'll be deducting their payee. They'll be deducting your payee and they will not pay with the government. The company is expected to deduct and also remit to the relevant internal revenue service. And you're expected to do all of this before the 10th of the following month. So let's assume that, okay, we are in the month of November. Happy New Month, everybody. So we're in the month of November. October salary has been paid and it has been deducted. This fund is expected to be remitted to the state internal revenue on or before the 10th of November, right? And the good news is that when you do all of this, at the end of the period, you are entitled to what is known as your tax clearance certificate. Now we have our value-added tax. For our value-added tax is expected to be filed. This return is expected to be filed monthly on or before 21st of that month. You're expected to compute. And for computation of your value-added tax, remember, you as a business owner, you also pay what is known as value-added tax. And then you also receive value-added tax. So, okay, if you are as a business owner or as an individual, I'm pretty sure you must have eaten at Chicken Republic or you must have gone to ShopRite to get something. When you look at the receipt, you will notice that they charge you value-added tax. You know that they charge you value-added tax. So as a business owner, before you pay your VAT, you are expected to do what is known as a VAT computation. The VAT computation simply shows your VAT input, your VAT output, and then the difference will give you your VAT payable. And as an agent of the government, you are expected to take this money and remit to FIRS on or before the 21st of the following month. And if you've made no sale, or if you made sales but these sales are not vatable or as zero rated, so there's a difference between non-vatable services and products and zero rated products. So if you made no sale and these sales are not vatable or they are zero rated, that does not mean you will not file your return. You are still expected to file what is known as a new return. You are still expected to file. So remember, apart from just collection of taxes, the government are also out to ensure that you are compliant. So these are one of the key things you need to do. Then we have our CGT. CGT is you're expected to file and remit on or before 30 days after the transaction has occurred. This includes all your assets, your shares, your cryptocurrency, your property. You're expected to file. Now we also have withholding tax. Withholding tax is you're expected to file your return and remit on or before 21st of the following month. And when you do this, ensure you collect what is known as your credit note. A lot of people pay withholding tax. Remember what I said about withholding tax, right? It is an advanced tax. You are not just paying the tax for the purpose of paying the tax. It is an advanced tax. So which means that after paying the tax, you are supposed to get what is known as credit notes. And when you get this credit note, you are expected to give it to the vendor. Remember, you've deducted the withholding tax from the vendor's income, right? So after deducting, in exchange for the money that you've deducted, you're supposed to give your vendor what is known as a credit note, so that when your vendor is going to submit his own when you're at the end of the period, when your vendor is trying to submit his own return, he can also reduce his tax by presenting his or her credit note. So you're expected to ensure, as a company, you're supposed to collect that, and as a vendor, you're expected, it is your right to actually demand for your credit note if withholding tax has been deducted from your money. Then personal income tax. Before March 31st of each year, you're expected to actually file your annual returns. It is always once before March of each year. Yes, 31st March of the year, you're expected to actually have filed and pay all the relevant taxes that you're supposed to pay. Now, how can I legally reduce my tax liability? So the truth is that remember what I said at the beginning of the call. We have what is known as tax avoidance, and we also have what is known as tax evasion. So as an individual, there are different ways you can reduce your tax. As a sole proprietorship, there's a different ways you can reduce your tax. As a limited liability, there are different ways you can reduce your tax. For individuals, the first thing is what is known as voluntary. Before now, the first thing is known as what is known as voluntary pension. Voluntary pension is when you as an individual decide that, oh, apart from the 8% that I'm paying as my mandatory pension, I want to pay more for my pension towards my retirement. You can do this and pay. But gone are those days whereby, oh, people pay. Remember now, even when you pay your pension, there are limitations. You can't just go and collect your pension at the end of the period. So when you are doing all of this, you need to put it into consideration. You can't just go and you can't just pay your pension, make voluntary contributions. When you're making this contribution, out at the back of your mind that there are limitations. You can't get your money. You can't get your money until maybe you're out of job for a certain period of time, or you've clocked a certain period of age, or in this case now you can even use your pension to even get to pay to make as a down deposit for your mortgage. So those are the key things you should put into consideration as an individual. So you can reduce your tax liability by voluntary pension. You can also reduce your tax liability by what is known as a tax insurance premium. A tax insurance premium is just, oh, I'm insuring my life, and then I pay a certain amount of money. Before now, what most individual or most employees do, they'll pay their life insurance, and after paying their life insurance, few months after it, they'll go and collect it back and say they're not paying life insurance again. They'll collect their premium. But now, of course, tax is evolving, everything is evolving, and the government are how to close every loophole that can make people to pay less taxes. So gone are those days whereby you put life insurance, you get your money and you get it back after a few days. Now you can't just get your money back. You have to wait for a certain period of time before you can get your life insurance. And like I said at the beginning of when I was talking about our payee, as an individual, you can also enjoy what is known as your rent relief. Before now, there's something we actually what the relief that was being given to you is your CSR. But now, what is being given to you is rent relief. So they'll give you that 20% of your rent, or a maximum of 500,000 naira is the relief that the government are giving you as it relates to your rent. And also, as an individual, you're also entitled to a relief, which is termination benefits. So if your employer terminate your employment now, if you terminate your employment, you know that that benefit that they give to you when they terminate your employment, the termination benefit, as long as what they are giving to you, that benefit is not up to 50 million naira, such funds are still exempted. As long as it's not up to 50 million naira, such benefits are still exempted from taxes. So for sole proprietorship, that is business owners, of course, you can also take advantage of voluntary pension, you can take advantage of life insurance, or you can take advantage of registering your business as a limited liability company, so that if your turnover is less than 100 million naira, you will not have to pay taxes. The only thing you just have to pay is your payee on your salary as a business owners. And also allowable expenses. I would like to emphasize this. As a business owner, you are expected to ensure you record all your business expenses. If you cannot hire a full-time accountant, you can outsource this to organizations like Akkant. At Akkant, one of the things we do is we help business owners to keep their records. So if you feel that, oh, it's difficult for you, you want to focus mainly on the operations of the business, you can outsource such functions to organizations like Akkant, and we would help you keep all your records, so that when tax authority come and they're like, oh, where's your business record? Where are the allowable business expenses? We will be able to say, oh, these are the allowable business expenses that you've incurred so far. Now we also have what is known as LSC, that is the limited liability company. Of course, allowable business expenses are key. And what are allowable business expenses? These are expenses that are wholly, that are necessary, that are relevant and exclusive for the business. That means if you are, imagine, I'm going to give you an example. Imagine you are traveling. If you are traveling to a place like China for vacation, for your vacation, and it has nothing to do with the business, such travels will not be allowed as a allowable business expense. But guess what? As long as you can prove to the tax authority that, oh, the fact that you took a trip to China is not for vacation, but rather you use it to maybe go and look for business contacts that can help improve your business. Kind of travel can be referred, such kind of expenses can be referred to as an allowable business expense. So that is why it is necessary for you to get a tax consultant or to get somebody that knows all of this so that they can help you put your business expenses together, so that when it is time for you to meet with the FIRS, all of this information will have been properly put together and you will not have to pay lots of tax. Remember, we are still talking about how you can reduce your taxes. Then there's also something known as capital allowance. Capital allowance is an allowance for buying some assets. Maybe you bought some assets like equipment, fittings, you bought vehicles, you build a building for your organization. You are allowed, the government is going to give you what is known as capital allowance. And for different type of assets, the rate varies. And also, we also have what is known as loss carry forward. If you made a loss in your business, you can carry it forward. So if you made a significant loss this year, you can carry it forward and recover that in the coming year up on 4 year. So at this point, I would like to say, for business owners, as a business owner, one of the key things you need to focus on in this regime is, one, ensure that your business one major thing you need to ensure is that ensure that you're keeping your record. I will not ensure that you'll be keeping your record after you've, of course, registered your business. Ensure that you're keeping your record. You're keeping all your relevant record. You're keeping your cash. That is, you're keeping your cash record. You're keeping your revenue record. You're keeping your expenses record, so that if need be, you can always present this information to the tax authority. Another thing I would also want to advise business owners is, as a business owner, please stop mixing your personal income with your own money. See, somebody will say, oh, I want to pay money to your account. Say, oh, let me send my personal account, send it to me. No, 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 don't do that. Always treat your finances entirely different from your business account, from your business finances, because of tax purposes. Because if your business money enters your personal account, the tax authority, the state internal revenue will not say that, oh, this is your business money. They are going to refer to such income as your income, and they are going to charge you to tax based on that table that I have presented to you. So at this point, I would like to take a pause now, because I know during the course of this call, there have been a lot of questions. A lot of people have questions that they would like to ask. So I would like you to please ask your question. You can either use the chat box to drop your question, or you can unmute your mic and ask your question so that answer can be provided. So if you have any questions, you can kindly unmute your mic. And when you unmute your mic, your question will be taken and answers will be provided. So while the questions are coming up, I would like to talk a bit about Akkant. So at Akkant, one of the key things we do is we help business owners to keep their books of account. We practically outsource your account functions to us, from accounting functions to payroll computation to your taxes. We do all of this for you. We act as your tax consultant, we act as your accountant, we can also act as your payroll manager, and all of the services will be provided to you. So is anyone speaking? If you're not speaking, please mute your mic. But if you have a question, you can unmute your mic. Maybe just raise your hand and your mic, so that you can be called upon, and then you can ask your question.
Hello, good evening.
Good evening.
Yeah, my name is Alicia Etugudo from Fresh and Natural Family Limited, an agro-processing company. I just want to ask, what if I needed to buy, I needed some money from probably a relation to buy an equipment. and the money is transferred into my account as a loan. And how will I defend it when I'm presenting my tax documents? Thank you.
Thank you so much for that question. So just like you said, it's a loan to your business, right? First thing first, I would advise that you have like a loan agreement. You have like a loan agreement that shows that, oh, your family member is lending you some money. If the family member is charging a particular interest rate, it is clearly stated in the loan agreement. If there are no interest as per family members thing, then you should also state all of that. Have a loan agreement, and when you have a loan agreement, the job of your accountant is to ensure that this information is properly presented on your books, right? Is to ensure that the loan is being presented on your books, so it will be recorded depending on the tenure of the loan. If it's for less than a year, it will be recorded under your current liability, but if it is more than a year, it will be recorded as a long-term liability. So it will not be, such funds will not be recognized as your revenue, rather it will be recognized as a liability for your business, because you are meant to pay it up, because you've used that money to actually get an asset for your business. So, and if you don't know how to go about this as a small business owner, that is one of the things we are how to do at Akkant. We are how to support business owners to ensure that they keep the proper books of accounts, they keep the proper record, and present it in a way and manner that allows them to pay less taxes, and of course at the same time they are compliant with the relevant taxes. So while we are still waiting for more questions, I would like to talk about other things that Akkant can do for you. So at Akkant, we help you to also put together your backlog. Hi.
Hi, there are questions in the comment section. Sorry.
Okay, there are questions in the comment section. Okay, let me just check. Sorry, just give me a second. I'm trying to bring it up. Okay, I can't see the question right now. Please, if you can help me so that I can provide answers to it. So you can just help me with the question and then I'll provide answers to it.
Okay. So some people may be wondering about how to file their taxes, right? So they know what they're supposed to be paying, how much they're supposed to be paying, thanks to the breakdown that is provided. How can they now go about filing these taxes? Is it virtual? Is it physical offices? So that's one of the questions. The second one is, how are freelancers going to be affected by this tax laws, right? So they typically receive money in their personal accounts. They are not a registered business. How would they be affected by this? Then the third is, what would you recommend for businesses looking to be compliant but want to reduce their tax burden? So you already mentioned things like registering as a limited liability company instead of business code. All of that these things would be useful. And then the last one is related to the question that Madam Alicia asked. So how is income recognized? Because not every money that comes into your account is the revenue generated by your business.
Okay, thank you so much for. Okay, thank you so much for those questions. So I'm going to start with the last one, which is revenue recognition. So the key thing is, that is why as a business owner you have to take it upon yourself to ensure that you keep proper books of account, because the tax officials will just take everything. They will assume that everything that comes into your bank account is revenue, right? As in the case of Miss Alicia that said that, oh, what if she got a loan and the loan is being transferred into her account? Of course, the tax official are going to say, oh, this is revenue. And in real sense, it is not revenue. So you as a business owner, you have to take on the burden of actually ensuring that your income are properly recognized. You properly record it and say, oh, this is my income. You can take it upon yourself, or maybe creating, using an Excel software, using accounting tools, or even outsourcing the functions to an organization like Akkant. And Akkant will help you keep all of this record and ensure that your revenue is properly recognized. your liability is properly recognized, your assets is properly, and most importantly, your expenses are properly recognized, and they are recognized in a way and manner that allows it to be tax allowable. So that is one of the reasons why you have to keep proper books of record, because the tax authorities will not do that for you. Remember, their goal is to make more. Their goal is to generate more taxes, and if their goal is to generate more taxes, the only way they can generate more taxes is when you have more revenue, lesser expenses. That is, lesser expenses will also result in more profits, and more profits translating into more taxes. So you have to ensure that you, as a business owner, you recognize your revenue. You also recognize all your expenses. Don't leave anything and say, oh, let me recognize all of it. Even if you buy paper, even if you buy Bible, they are stationaries. They are meant for your business. Recognize all of this, right? Recognize all those interests. Recognize all those bank charges that the banks are charging you. You are meant to recognize it. Recognize all of this, and so that as much as possible, the taxes, the profit you are declaring will be low, and when the profit you are declaring will be low, you have to pay less taxes. And this the next question is the second question was how do I file my taxes? So the first thing first, like you have to register your business, and when you register your business, you're expected to register with the FIRS, and you're expected to register with the State Internal Revenue Service. FIRS is the same across all the country, right? But you have to register with the tax office. If you are in Abuja, there are a lot of FIRS office. We have Wuse, we have Maitama, I think we have about 2 tax offices in Wuse. We have Maitama branch. We have there are a lot of tax offices. You have to pick a tax office and register. And you can also register online, right? You can also register online. The only issue is, of course, we are in Nigeria. Registering online might not just go through or be as fast as you want it to be. So you can easily walk into the tax office of your choice, preferably nearest to your business location, and register. Provide all the relevant documentation like your CAC document, your ID card, and all of that. Complete all the relevant forms. Open a tax promise account. So when you register with FIRS, they are going to you have to open what is known as a tax promise account. So when you open the tax promise account, your login details will be provided to you. The login details is to allow you to log into your own personal platform. So when you log into it, you'll see your dashboard, your company name, and all the relevant taxes that you're supposed to pay in terms of VAT, your company income tax. You see all of these taxes, and when it is time, you file it. But if you don't want to go through all of this process, taking up such body, you can outsource this. You can outsource it to a tax consultant like Akkant. An account will take up the burden of filing your tax, of helping you to register your company with FIRS. They'll also take up the burden of helping you to register to file your monthly accounts, that is your VAT, your CGT, your payee. They will also help you to file your annual return as at when due, so that you can focus on your business and you don't have to pay penalty and interest as a result of not filing. Then the third question, in terms of sorry, please, can you help me with the third question? Not sure, I don't want to mess it up. Please, can you help me with the third question? I'm not sure I've answered it. I've provided an answer to it. Okay.
Can you hear me? My this button is not working properly. But can you hear me?
Yes, I can hear you. It's a bit faint, but I can hear you.
Okay, so someone is asking, is there a possibility that some businesses are VAT exempt? You already answered that, but maybe we can go through it again, perhaps differently. And then the other question is around freelancers, how they're going to be affected by this, considering that most of them do not have registered businesses.
Okay, so your voice was a bit faint, but I think I got some of the question. So in terms of exemption, in terms of exemption, of course, you have to register a limited liability company, and there's still just to mention, all of these are some because of the tax is new, right? The tax committee has been going around to enlighten people. They've been going around to enlighten people, but there are still some gray areas in the tax law, because lots of people are like, wait, do I necessarily have to register a limited liability company? What if I've registered an enterprise? And of course, my business turnover is still less than ₦1 million. But there's still some gray area. But right now, what the tax act is saying is that as long as you're a limited liability company and your turnover is less than ₦100 million, you are exempted from taxes. But that is not the case for a business owner. That is, if you register your company as an enterprise. If you register your company as an enterprise, you will be expected to pay taxes based on the tax table that I showed you at the beginning of the call. You'll be expected to pay your taxes based on that. And of course, if there are any other development, we are going to let you know, oh, these are the new developments, and this is how you can position your business in that regard. But remember, the key thing is, first thing first, you must register your business, or advise to register your business as a limited liability company. You separate your funds. Your personal funds should be clearly different from your individual funds. Your personal funds should be clearly different from your individual. Your personal funds should be different from your company fund. That is, you should open separate bank account for each, for yourself and for your company, so that your own money does not go into the company's money, and your company does not go into your does not come into your own money. Then also ensure that you properly record your transaction. Please try as much as possible. You record all your business transaction. Recognize your revenue. After recognizing your revenue, you also recognize your expenses. The bedrock of all of this, the bedrock of taxes, is your records. If your records are not properly kept, you will pay more taxes. You are going to pay more taxes than you expect, than you ought to. But if your records are properly structured, you would have to pay. If your records are properly structured, then you will pay what you ought to pay in taxes and not more taxes. So if we have no more questions, do you have any more questions? Just ask.
Hi, good evening.
Good evening.
Can you hear me? Yeah,
Yes, I can hear you.
And thank you for the session so far. I've learned a lot. So I just want to get like clarity on the question I asked. So what I really want to confirm is for VAT, right? Is there an exemption for some certain kind of businesses, or does the exemption for businesses that don't make up to the turnover of 50 million a year, does it like also apply to VAT as well, or you have to file VAT separately even if you are exempt from company income tax? Please, can you confirm that?
Okay, yes. So if your turnover, the fact that your turnover is less than 100 million does not mean that you will not pay VAT, right? So let me clarify, it does not mean that you will not pay VAT. The only time you don't necessarily have to charge VAT as a business owner, the only time you don't necessarily have to charge VAT, please get it right, the only time you don't necessarily have to charge VAT or act as an agent of collection of VAT from your customer to FIRS is when your turnover, oh, you've done your competition, you realize that, oh, I'm not making up to 1 million or up to 25 million naira. I'm not going to make up to 25 million naira. Then at that point, you're not expected to actually you're not expected to start charging VAT. But guess what? Whether you make up to 25 million naira or not, you're expected to actually file your returns. You're expected to file your returns and still say, oh, new VAT. New VAT, you're expected to file your returns on tax promas. New VAT on tax promas that, oh, I am not paying any, I did not collect VAT, so I'm not paying any form of VAT. You're expected to file that on your tax program. And of course, there are some products, there are some services that are exempted. So I would like to classify them on. I will not want to classify them as companies. I would like to classify them as products and services that are exempted from VAT. So we have what is known as VAT exempt, and we also have what is known as zero rated VAT. So zero rated items. So for VAT exempt simply means that you are not expected to charge VAT on these services. Example of services are medical services. So if I am as a doctor, if I'm a doctor and I'm rendering medical service, I'm not expected to charge VAT on my medical services. if I'm rendering education services, like maybe I have a tutorial center or I have a school, when they are paying school, when the ward or the parents of my wards are paying school fees, they are not expected to pay VAT on their school fees. So you as a proprietor, you are not expected to charge VAT on school fees, or maybe tutorial lesson, you are not expected to charge VAT. We also have what is known as basic food items. That means food in their raw state, like maybe raw beans, raw rice. We also have maybe gari. Not, of course, if it is packaged gari, as long as it is packaged, you pay VAT on it. But if it's that gari that you went to the market and they put it for you in nylon, and you take it to your home, you are not expected to pay VAT. But if it is a packaged gari like Ijebu gari, maybe you went to a supermarket like maybe Ebanon, or you went to ShopRite, you are expected to pay VAT. So if you have a business and you are selling packaged food, you're expected to charge VAT on that business. But if it's in their raw state, you are not expected to charge VAT. But we have what is known as a detailed schedule that shows a list of services and list of products that are VAT exempted. That shows that, oh, if any of these services, or if you are selling any of these products, you are not expected to actually charge VAT on them. And I'd like to emphasize this, that as a business owner, have it at the back of your mind that you are not paying the VAT out of your own pocket. The VAT is a burden that is being transferred to the final consumer. It is the person that is consuming the product that is paying the VAT. The only thing you are doing as a business owner is that you are just acting as an agent of collection for the government. You are just helping the government to collect this VAT, and you are remitting to FIRS. Not that you are paying the VAT out of your own business income. That is why I always advise that as a business owner, issue invoices to your customers, and clearly, and as an individual, also ensure that you demand for invoices when you enjoy services or you buy products, so that it can clearly state, as a business owner, your invoice should clearly state the amount you are charging for your products or your services, a line item showing how much VAT they are supposed to be. Bear in mind that VAT is 7.5, how much VAT they are paying, and then the total. So let's assume that someone came to your store and the person came to buy wig. For ladies, you went to buy wig, and the wig you bought the wig for ₦1,000,000. You are expected to pay 7.5 of that as VAT. That means in total, what you're supposed to pay to your wig vendor is 1,075,000 naira as the total amount. 1 million for the wig and 75,000 naira as VAT for your wig. And all of this should be clearly stated in your invoice. That is why, as a business owner, you're expected to issue invoice so that your customer can see all of this. So like I said, we have a schedule that shows what are exempted and what are zero rated. For zero rated items, these are items that you are charging VAT, but instead of charging 7%, you are just charging 0% on it. So they are referred to as zero rated items. So thank you so much. I believe that answers your question. Please.
Hello.
Okay, yeah, Oluwafemi, please, you can ask your question.
Yes, good evening.
Good evening.
Thank you so much for this wonderful session. It has been quite an impactful one. My name is Oluwafemi, and my question is around the PE, actually, and it's centered on the rent relief aspects. There has been a whole lot of controversial issues around that aspect. I mean, you are giving a rent relief for employees, right, to actually claim such that their tax liability will reduce. But you are not giving it to all the employees. You are trying to exempt some people from claiming such relief. Example is people that are living in their own apartments. You are saying they are not entitled to such relief. Is there no kind of a kind of partiality on the part of the government, and how does the government want to address this kind of issue by next year?
Okay, thank you so much for that question, Oluwafemi. So my response to that is, so of course you've said it all, which is that the rent is if you are staying if you're a homeowner, you're not entitled to claim rent relief. That's true. And in terms of how to address it, the truth is that the government has been having, the presidential committee has been having what is known as town hall meetings, and the purpose of the town hall meetings is to speak to people like you and I, speak to the employees, speak to homeowners. Where the fact that I have a home does not mean that I'm not entitled. So they are gathering all of this information, right? They are gathering all of this information, and the fact that they are gathering, it means that they are going to take all of this information, all this feedback back, and if need be, they are going to make the relevant adjustments. If need be, but the fact is just that, remember, the goal of the tax is to ensure that they are charging, the rich people are paying more, while the poor people are paying less. Remember, that is why it's a progressive tax, right? And from the chain of thought of the government, they are of the opinion that the moment you have your home, to a large extent, you will not necessarily categorize yourself as somebody that is maybe earning a little amount of money, that is earning little, right? So as long as they will not really want to say, class you under someone that is earning little. So and because of that, that is one of the reasons why they feel that as a homeowner, you're not earning little, and because you're not earning little, you're not supposed to take advantage of the tax relief, right? Why people, so that people that need the tax relief can get the tax relief. But just like you said, all of this feedback have been taken, and of course, if need be, all of this will be adjusted.
All right. Thank you so much. Again,
I
would like to ask this also, because for let me say a spouse, right? They are living in the same apartments, rented apartments actually, and they are working in the same, let me not say the same office, they are working in different offices, right? Who is expected to claim this the rent relief between these two spouses?
Okay, so this is it, right? The way I'm going to look at it, I'm going to look at it from the aspect that both individuals are contributing maybe a certain portion to the rent. So if both individuals are contributing a certain portion to the rent, they're expected to claim that portion of their rent that they are paying. Because remember, when you are claiming all of this rent, you will not, it's not just I'm claiming my rent relief. You're expected, before the tax authority would accept that this relief is allowable, that they are going to accept this relief, you are going to provide invoices. They're going to provide invoices, and they're going to verify all of these invoices. So it's not necessarily the person that is supposed to claim it. The person paying the rent is the person that's supposed to claim it. And if both parties are paying rent, they are supposed to claim to the tune of the rent that they are contributing.
Yeah, all right.
Yes.
No problem. Thank you so much.
Thank you. So do we have any more questions? Please, if you have your question, please do well to raise your hand and ask. But I have some questions that other people have been asking, so I'm just going to answer. I'm just going to try as much as possible to provide answer to it. Some of them I've mentioned already, which is, someone was like, what is the purpose of the NTA? That is the Nigerian Tax Act 2025. The purpose of it is to merge all the tax into one, make payments easier, improve government revenue. The government wants to make revenue, by the way. And of course, they don't want to overburden tax. They don't want to overburden their citizens. That is why they're like, let the rich people pay more taxes and the poor pay less taxes. Then also, if your turnover, something like a small business affected, small business are exempted. So which means that if your turnover is less than 100 million, you have to pay 0% in company income tax. company income tax. Then another question is, when does the law take into effect? The law take into effect from January 1, 2026. So which means that as a business owner, you are expected to actually start putting structures in place. If you need to get your books of accounts, start setting up your books of account. If you need to outsource your accounting function, start outsourcing it. Start putting in place financial policy. Start reviewing your finance manual to ensure that it takes into consideration all of the period, all of the taxes, so that wherever there is anything, your account can pay all the relevant taxes, and so as to ensure that you don't end up paying penalty. So I would want to just, as we round up, I would want to just mention that as a the major reason why we have the Nigerian Tax Act is to modernize Nigerian tax system. And if it is well implemented, it will promote fairness, it will promote accountability, because you will know how much you're supposed to pay and you would pay what you ought to pay, right? It will also help the government to generate more revenue, which will reward innovation and digital compliance, because at this point you'll be compliant and you'll be innovative. As a business owner, you will start keeping your record. You will not be doing paper and biro. You have to maybe use an accounting software, or you have to outsource the function. It will also support low income earners. So what I'm going to advise that we do, since as a member of this call, the fact that you joined this call, you have access already to what we've put together as a tax readiness guideline. The tax readiness guideline has been put together taking into consideration all the relevant all the changes, and it is the tax relevant guideline would help you as a business owner to know what to do. It's like a checklist that would help you to know what to do as a business owner at every point in time. Right now, you can use it to audit yourself. As an individual, you can use it to audit yourself to know, what am I doing wrongly. It will help you to, so that you know the next step. Also, we also have what is known as a payee template. So as the business owner, you don't necessarily, if you are, am I going to calculate the relevant taxes for my employees in the coming months? We have what is known as a payee template that you will have access to. The pay template will just help you to, the moment you enter the amount of the moment you enter your basic salary, it will automatically calculate it, what you have to pay or what your employee have to pay in terms of taxes. Then we also have what is known as our discovery call. And the goal of our discovery call is to help business owners, because we don't want to just we want a situation whereby we help business owners to structure their business based on where they are, because for different business owners in different industries, there are different tax laws applied applicable to them. So our discovery call, it would help you to have a one-on-one conversation with us, and after having a one-on-one conversation with us, we would be able to see what you are. We'll be able to see where you are financial wise, in terms of the structure you have in place, and then we can now advise you in terms of, do you need a backlog account? Do you need to do like previous years? Let's harmonize your information together. Do you need to set up a financial management system? We'll help you set it up. Do you need to automate your system? We'll help you set it up. In terms of taxes, we'll give you like a calendar. This calendar will help you know when to pay your taxes. It will also, we can even take up the burden of even house. You can even outsource the function to us, and then we will help you to we'll help you in terms of filing your taxes, ensuring that we are filing your taxes as at when due. So all of this can be done through our discovery call. And normally for our discovery call, we usually charge a rate of 75,000 naira. But for members of this call, we are currently offering it at the rate of 10,000 naira for everybody that is on the call, as long as you're on the call. If you want to have a discovery call to know the next step, the next thing to do for your business, we are willing to speak to you and help you structure help you tell you what you need to do for your business, right? For a rate of 10,000 naira, and we are offering all of this to just members of the call. So if you're on the call, this is a good opportunity for you to actually key into it and sign up for a one-on-one discovery call. the link to the discovery call will be in the chat box and will also be sent to the platform, and also your email. So if you are interested, you can, with a show of hand, or you can just send a message to us, send us a DM on our socials, or on the platform. You can just signify, and then the link for the payment so that we can have a discovery call will be made available to you. Thank you. So at the end, since we are at the end of the call, I would like to introduce Mrs. Yemisi. Mrs. Yemisi is one of the founder of Use Account BPO. So I would like to introduce her so that she can say one or two things and bring this call to an end. Thank you once again for having me.
Everyone, good afternoon, good evening. I hope you can hear me. I wasn't expecting to be brought up, but yes, thank you so much, Tammy, for the very insightful, well broken down session. I hope that everyone got to learn a thing or two. So we pretty much set up accounts to create jobs for young people, women, by providing financial management services to MSMEs and early stage startups. So Dami has extensive background in accounting. She's worked across various industries and serves as accountant and tax consultant to a lot of businesses. And I've worked in enabling access to finance for MSMEs, early stage startups. And one thing that we've seen in our work is the importance of proper tax management, proper financial management, right? So if the chances of you growing your business if you manage your finances well are higher than those who do not. And also the chances of you getting funding. And that's why we came together to set up Akkant BPO. So this recording is going to be up on YouTube by Monday. So you can always go back and reference it. You also have loads of free resources, like you've mentioned, that you can go and download and get started with. If you want more hands-on support, um, just reach out to me or reach out to us on our social media platform, and we'll be able to provide you with customized support based on where you are. You can start off with a one-to-one strategy session where we customize all of this information specifically for your business, right? So how do you build better financial management system? How do you become tax compliant so that you're not even paying much more than you're required to? That's what the one-to-one session can cover. We have wide range of services that we can provide to you. So if you've maybe been keeping your record manually, even if you've been keeping it manually for the last 10 years, we are able to help you digitize that process, support you with your tax payments for the last few years. If you're not registered, we can help you register your business as well. Prepare management reports. We can also serve as your CFO. So a couple of our clients are trying to raise and they're looking for CFOs to serve on their board. That's a service that we can provide. We can also match you with in-house talent. Perhaps you want somebody working on your team and not outsourcing to us as an agency. We have a community of financial management experts, entry level to senior level, who we're able to match with. So please get in touch with us. Our goal is to make sure that your business is making better decisions, building sustainably and profitably, and also investment ready by having the right financial management system. So thank you again for joining us, and we look forward to more sessions like this.
Thank you, thank you, thank you, thank you. Of course, everything has been said. We look forward to working with you, and we look forward to you having a more prosperous business. And of course, happy new month once again. Do have a nice day. Thank you.